Welcome everyone to our session Management Accounting, Decision and Control, and today we're going to see AAT Sample Assessment 1. From this sample question we're going to solve one by one. We try to explain every single question we have, and we try to do all the workings that makes us more clear every single question based on the requirement. So let's start with question number 1. Let's start with task number 1. In task 1 we can see there is a 12 marks question we're expecting in the exam, and this question is from the variation of the cost. So you have to identify the fixed cost, the semi-variable cost, step cost, and the variable cost. Also, we have to see how much the cost that is based on 15,900 units. So we already know the direct material, that is our variable cost. Direct material is always variable cost. Rent per quarter is a fixed cost. Lease machine, that one they're saying 7,522 for every 5,000 unit produced. So it seems like it's step cost because it increase in every 5,000 unit. The next cost we have, that is maintenance, and we can see here is saying 2,150 per quarter plus £2.07 per unit. So up to a certain level it is fixed, and after that it is variable per unit. So we can say that is a semi-variable cost. Semi-variable cost is the cost where some portion of the costs are fixed and some portion of the costs are variable. So we can understand up to 2,150 that is fixed, and after that that is variable per unit. So you understand that's a semi-variable cost. So let's start with the calculation now. Direct material, as we know, this is our variable cost. So let's find it out how much is the cost per unit. So it says 31,008 pound for 3,800 unit. So if I try to find it out how much is the cost per unit, 31,008 divide 3,800, so that will give me per unit. So 31,008 divide 3,800, that gives me £8.16 per unit. And the question is asking how much is the cost for 15,900 unit. So if we multiply by 15,900, that will give us the total cost for 15,900. So that will be 129,744. 129,744. And this one we classify as a variable cost. Variable cost, because this one will be vary per activity. So when the unit is more, the cost is more. When the unit is less, the cost will be less. So when the cost increase or decrease based on the number of unit, we call it variable cost. The next cost we have, that is a rent, and that is fixed cost because it says fixed per quarter. So even though I don't make anything, still I have to pay the rent. So that's the reason this is a fixed cost. So my rent will be 7,450, and it's not really matter how many unit we're going to make. We can make 3,800 unit or we can make 15,900 unit, but the cost will be same because the rent for the building is same. So we can say this is our fixed cost. The next one we have, that is leased machine, and on this leased machine category we can see this cost, they said 7522 for every 5,000. So basically this is the step cost, and this is fixed up to a certain level. So for 15,900 unit, how many steps we need? So 15,900 unit, how many steps we need? So every 5,000 unit we need, the cost will be 7. So let's say if we divide by 5, we understand we need 3 point something. So 7, 15,900 divide 5, that gives me 3.180. So this is the steps we need. 5,000. So for every one step the cost is 7522. So for second step again 7522. Step number 3 7522. And even though for only 900 unit I need one more step, 7522. So all you need to understand here, for every 5,000 unit we have to spend 7,522 pounds. Now if it is 5,001 unit, even for the 1 unit we have to spend the full amount of cost, that is 7522. So we can see for 15,000 is 3 steps, and for the 900 unit we need the full steps up to 5,000. So if we added all of this, 7522 times 4, that will give us 30,088. 30,088. So we said 30,088. And this is our step cost. And the next one we have maintenance. So maintenance, they said up to a certain level is fixed, and after that is variable per unit. So we can say it is a semi-variable cost because fixed and the variable are mixed here. So we said okay, so £2.07 per unit. So let's say for 15,900 unit times 2.07. So 15,900 times 2.07, that is 32,913 plus the fixed is 2150. 2150, and that total give us 35,063. So you're going to write here 35,063, and this is our semi-variable cost. Semi-variable cost. That's it for this one, task number A. So we move to task 2. Same task B. Let's move and have a look what we have here. The next point we have for this question is saying you have been supplied with the following information about a factory's overheads: unit produced, total overheads. So this is our unit in this 2, and this is the overhead. There is some information here. They are saying the fixed portion of the overhead increased by 12,000 when more than 30,000 units are produced. So if I make more than 30,000 units, the fixed overhead will be increased by 12,000. So whatever is the fixed cost, that will be increased by 12,000. The next point we have here, they are saying variable cost decreased by £1 per unit for the unit produced in excess of 25,000 unit. So if I make more than 25,000 unit, my variable cost will be decreased by £1. So that's fine. Let's have a look how many units we produce here, 21 and 36. So we are looking for the fixed cost and the variable cost for both 21,000 unit and 36,000 unit. So let's find it out. How can we do that? So of course from the question we can see it look like we have to do the high-low method. So let's do the high-low method. The high unit, that is 23,900. The cost is 324,400, and the lower unit is 19,000, and the lower cost is 295,000. So let's find the difference. That is 23,900 minus 19,000, so 4,900. The cost difference 324,400 minus 295,000, 29,400. And if we like to find it out how much is the variable cost per unit, the unit has to go down. So 4,900. So if I divide with 4,900, that will give me £6 variable cost per unit. Now I have the variable cost per unit. Now I will be able to identify how much is the fixed cost. I can pick any of this. I can pick 19,000 or I can pick 23,000. I can pick any one. So let's pick the 19,000. So for the 19,000 unit, the total cost was 295,000. So for the 19,000 unit, if I subtract the variable cost, so whatever will be the remaining, that will be the fixed cost. So 19,000 times 6, that will give us 114,000. So if by total variable cost, the difference will be our fixed cost, that is 181,000. So now we know the variable cost per unit is 6. On the other hand, the fixed cost total is 181. Now we can go back and see the question requirement, what they're asking here. They're asking how much is the cost for 21,000 unit. Okay, so let's find it out. How much is the fixed and how much is the variable? So we know the fixed for 21,000 is 181. We already calculated that. Remember, there is some information in the question. They said the fixed cost will be increased by 12,000 if the unit is more than 30,000. So the unit is not more than 30 here because it's 21,000, so don't have to worry about it. On the other hand, all you need to do, you need to find the variable cost. So 21,000 unit times 6, that will give you 21,000 unit times 6, that will give you the variable cost 126,000. The next question we have 36,000. So there is two information relevant with this unit, because it says if the unit is more than 25, the variable cost will be increased by 1. So we have to make consider as well, and the fixed cost will be increased by 12. So let's have a look. So fixed cost was before 181,000. Now it will be increased by 12,000 because the unit is more than 30,000. So 181,000 plus 12,000, that gave us 193,000. 193,000, this is our fixed cost. And on the other hand, the variable cost up to 25,000 unit, that will be £6. So 25,000 unit times 6. So 25,000 unit times 6, that is 150,000. 150,000. And if it is more than that, If it is more than that, this it will be reduced, decreased by 1 per unit. So 25 and the 36, the difference. So 36,000 unit we make, and up to 25,000 is 6. So 11,000 unit, the variable cost will be 5, 1 pound less, times by 5, so 55,000. And if I added this to, my total variable cost will be 205, and that is 205. This is our total variable cost for 36,000 unit. Alright, let's move on to task number 2. Let's have a look what we have here. So in task 2, we can see this question is asking for the variance analysis, and this question can be tricky in the exam sometimes, so you have to be very careful for this type of question. So you can see we have a different type of information here. We have the budgeted information and we have the actual information. So you already know the variance analysis means the difference between the budgeted and the actual. So let's have a look what we have on the bottom. So they're asking the price variance, the uses variance, rate variance, and the efficiency variance. So you have to calculate all of this: price, uses, rate, and the efficiency. The price variance tell us did I pay more or less. The uses variance tell us did I use the quantity more or less. The labor rate variance tell us did we paid more per hour to the employee. And the efficiency variance tell us did we use more hours or less hours to produce the units. And the bottom we have two more question here. It says the actual number of hour used, so how many hours we used to make this unit, and the actual price per kilo of the material. So we'll come back later on. Let's move on with the first one. So the first one they're asking variance number 1, price variance. Let's do the price variance first. So we can see the price for the apricot. So it's a 25,000 pound for how many unit? 5,000 unit. So if I said for the 5,000 unit, so 25,000 pound for 5,000 unit. So how much is per unit? 25,000 divided 5,000. So 5 pound per unit. So for 6,000 we should say 6,000, the cost should be 6,000 times 5. So that is 30,000. But actually we can see the actual cost is 36,000. So 6,000 we have more. Now the question is, if the 6,000 cost is more, how much is the cost per unit for the apricot? So we can see here 50,000 kilo, the price is 25,000. So 25 divided 50, that is 50 pence. So 50 pence per kilo. So if it is 50 pence per kilo, then how much will be the cost? So 25,000, 50,000 kilo should cost 25,000. So for 70,000 kilo we use for the actual. So for 70,000 kilo times 50 pence, the cost should be 35,000. But we can see the actual cost is 36,000. So the cost supposed to be 35,000 based on the 70,000 quantity we use. So use 70,000 kilo. The cost should be 35,000 because every kilo is 50 pence. But actually we spent it 36,000. So we spent it 1,000 more. So 1,000 is minus. So we can say is adverse. So 1,000 is adverse for this material price variance. The next one we have here, uses variance. So the uses variance is a little bit different. So the uses variance, we have to check how can we find it out, how much quantity we're supposed to use and how much quantity we actually used. So let's find it out. Based on the actual quantity, how much unit we should make and how much unit we actually make. So let's have a look at that. The first thing we can see here, how many kilo we're supposed to use for 6,000 unit. So for 5,000 unit we have used 50 kilo. Okay, 50 divide 5,000. 50 divide 5,000, so should use 10 kilo. So uses variance, so 50,000 kilo for 5,000 unit. So for 6,000, okay, we should use 60,000 kilo. So for 6,000 unit we should use 60,000 kilo, but actually we can see we have used 70,000 kilo. So if we use 70,000 kilo, we use 1,000 more. 10,000 more, isn't it? Yeah, 10,000 more we have, 1,000 more, and if we multiply by 50 pence per kilo, the standard kilo that we have already calculated before, 25,000 pound for 50,000 kilo. So 25,000 divide 50,000, it will give you 50 pence per kilo. So that will give us 5,000, and that's again adverse. So you can say the uses variance 5,000 is adverse because we use 10,000 kilo more than we should use. The next one we have direct labor rate variance. Direct labor rate variance. On the direct labor rate variance, we have to see, did we paid more per hour to the labor or did we paid less? If we paid more, then it will be adverse. If we paid less, that will be favorable for us because it's a cost. But if we pay the right amount, there will be no variance. So I would say direct labor for 1,000 labor we have used to make 5,000 unit. So we can say 1,000 labor hour we have used to make 5,000 unit. So per unit we have used 20 minutes. So for 6,000 unit we should use times 6,000, 1,200. So we should use 1,200, but we actually use 800. So 400 we have saved. That's good. That's for the uses. Now let's look record for the price. So we'll have a look for the price. 10,000 we paid for the labor, and for 1,000 hour. So 10,000 pound we have paid for 1000 labor hour, so we paid 10 per labor hour. On the other hand, actually we can see we have used 800 labor hour and we paid total 8,000 pound. So 8,000 pound we paid for 800 labor hour. That will 10 pound per hour. So the standard is 10 and the actual is 10. So we can say the rate variance is nil, because whatever was the plan to pay 10 pound per hour, we exactly paid 10 pound per hour, so we don't have any variance for that. On the other hand, the uses variance we have, because we should use 1200 hours, but we actually use 800 hours, so we save 400. So this is a favorable, and 10 pound per hour, so we have saved 4,000 pounds, so this is our favorable. Alright, let's go to the requirement and let's write it down here. Write it down here 5,000, the price variance, but this is actually 1,000. So it was on the question bank, so it was already there, so but it is a wrong answer. It should be 1,000 and it's adverse because we paid 1,000 pound more. The uses variance 5,000, that is adverse, that we have calculated on the top. Direct labor rate variance, this is nil, no variance. It's supposed to be 10 and it was actually 10. There is no direct labor rate variance. And the direct labor efficiency variance, that is 4,000 favorable, because we have saved 400 hours and every hour's direct labor is 10 pound, so that will give us 4,000 pound. Let's move to the next question. So let's read this question. It says each unit of product D is budgeted to require 2 hours of labor at a cost of 18 per hour. The company manufactured 950 units and the labor efficiency variance was 180 adverse. So they are saying we use 2 hours labor that cost 18 and company manufactured 950 unit, and after that the company have a labor efficiency variance 180 adverse. The requirement here is calculate the actual number of hours used to produce 950 units to the nearest whole number. So they are asking how many hours actually we use to make 950 units. So let's do the calculation. So for every unit we need 2 hours. So we said 950 unit should take 950 times 2, 1900 hours, plus we said 180 that we have adverse. So if we divide by 18, 180 divide 18, that gives you another 10 hours that we have used. So 1910 hours we have used to make 950 unit. You can do a separate calculation for that. You can show it other way. For example, you can calculate that 950 times 18, so that will give you the cost for that. That's 17,100 plus 180, and that will give you the total cost. So we said 950 unit, that gives you 18 pound each, 17,100, and we have another 180, that is basically adverse. So another 180, that gives you 17,280. So obviously if you have the total cost, you can identify now how much is the cost per unit. So we can say that divide 18, and that gives you 960. So this is 960. So actually this is the hours, but we have to multiply by 2 here because the cost is basically 18 per hour. So we just multiply by 1, so it should be 2. So we can do that way, 950 times 2 times 18, that will make more sense. So 950 unit times 2 hours, and every hour is 18 pound, that will give you 34,200. And after that we add the adverse 180 because this is the one we paid extra. So 180, that gives us the total cost we have spent, 34,380. And after that you divide by 18 to come back to the hours. So divide 18, it should give you the same hours, 1910. So basically we actually use 1910 hours to make 950 unit. Let's move to the next question. The product is budgeted to use 1.25 kilo of material per unit at cost 7.80 per kilo. During last month, the company used 1,140 kilo to manufacture 950 units, and the material price variance was 912 adverse. The actual price per kilo, so they're asking how much is the actual price per kilo was. So we have to calculate how much unit we have used, so that is 1140, and what was the adverse. So we have to get this figure on consideration, we have to add this figure with that, and after that we can see if you multiply with that, that will give you the per hours, and we will add back so that we can come back how much was the total cost. So let's do the workings and we see how can we do that. So the workings we're going to do here, how many kilo we have used, that is 11,040 kilo, and the per kilo is 7 pound 80. So 1140 times 7 pound 80, that gave us 8892. And after that we'll see how much was the adverse variance. So 912, we'll add that. So that gives us the total cost we have spent actually 9804, and this is the total cost of 1140 kilo. So total cost. So now we will divide by the number of kilo, and that will bring us back to per kilo cost. So that is 8 pound 60. So 8 pound 60. Even though the plan was to use 780, but actually we have spent 8 pound 60 per kilo because of the 912 adverse variance. Right, let's move on to the next one. In task number 3, we have to calculate the absorption costing and the marginal costing profit statement. The question is saying the inventory is valued on FIFO basis, so that every time if we have opening inventory or if we have a closing inventory, we have to value it by using the FIFO. Let's have a look what is the requirement. They're asking here, complete the budgeted operating profit statement below for the month 3 using the absorption costing and the marginal costing. So you have to know the difference between the absorption costing and the marginal costing. The main difference between the absorption costing and the marginal costing is, in absorption costing we include the fixed cost inside of the product. On the marginal costing we do not include the fixed cost as a product cost. Let's find it out how much is the cost for the marginal and the absorption per unit. So let's say absorption costing, and here we said marginal costing. So we can see the direct material is fixed for everywhere. So direct material is 15, and then direct labor also 10. Then we have a variable overhead. That one we can see up to month 2 is 230. So let's check 230 divide 10. 230 divide 10,000, that gives me 23 for month 1 and 2. So variable overhead 23. But for month 4 we can see the variable overhead is 250. So 250 divide 10, that will give us 25. So we'll make a consideration later on that. So if I make a total of this, that's absorption, so I have to add the fixed as well, but let's add this 3 first. 15, 10 plus 23, that gives you 48. 48 is the total variable cost. Now I'm going to add the fixed cost as well, because it is absorption costing. The fixed cost will be also part of that. So let's have a look how much is the fixed cost. That is 450. So 450,000 divide 10,000 is the production, so that will give us 45 per unit. So we can see we have 45 plus 48, that is 93. And on the marginal costing we can see we have the same thing, that is direct material 15, direct labor 10, and variable overhead 23, that is 48. We don't have to consider the fixed cost here. So let's have a look how can we calculate our cost for this absorption and the marginal to use in absorption costing and the marginal costing method. So let's calculate the sales for the month of 3. So we can see for the month of 3 we make a sell 11,000 unit. So we can say 11,000 times per unit is 90 pound. So 11,000 times 90, that will give us 990. So 990. And remember the sales is same for both marginal and the absorption, because there will be difference on the cost because of the fixed cost, but the sales will be same whatever method you use, absorption or marginal, both will be same. Let's talk about the opening inventory. Very careful with that because that could be tricky. They said we are using the FIFO basis, so any inventory that we couldn't sold for the month 1, that will go to month 2. If any inventory cannot sell on month 2, that will go to month 3. So we can see on month 1 we make 10,000 and we sold 8,000. So 2,000 basically come here as opening inventory. And in month 2 we can see we make 10. So 2 plus 10, that gives me 12, and we sold 9. So basically 3 left as the closing inventory, and whatever is the closing inventory here, that will be the opening inventory here, 3000. So 3000 basically the opening inventory for month 3. So we can say 3000 unit times, for the absorption costing we're going to multiply by 93. So 3000 times 93, that gives us 279,000. And here 3000 we're going to multiply by 48 because it's a marginal costing and we are not considering the fixed cost here. So that will be 48. So 3000 times 48, that gives you 144,000. Alright, the next question is asking for the production cost for the month 3. So we need to see how many units we have make in month 3. So we have made 10,000 unit. So 10,000 unit, and the production cost is the total cost for the absorption and for the marginal. So you can see the variable cost is different here, that is 250. So that gives me 25 per unit. So 25 plus the variable. So before it was 23, so I have to change it. So I said direct material 15 and direct labor 10, that is 25. So that gives me 50 is the marginal cost or variable cost, plus 45 is the fixed cost. So for the month of 3, my total cost for the absorption costing is 95 per unit, and for the marginal is 50. So let's have a look for the 10,000 unit. So 10,000 times 95, that gives me 950,000. 950,000. So basically 10,000 unit we are make in the month of 3 and multiply by 95 per unit if I use the absorption costing. So that gives me 950,000. On the other hand, for the absorption costing we cannot take the fixed cost, so we just calculate the variable cost, that is 50. So 50 times 10,000, that gives you 500,000. The next question, you're going to see the closing inventory. This is the same story we have done. So how many units left? So we can see 3000 is come from month 2. So 3000 come from month 2. In month 3 we have make another 10,000. So I have total 13,000 unit now. From 13,000 unit I have sold 11. So 2,000 is my closing inventory. So 2,000 unit times this one, I'm going to multiply 2,000 times with the full price, that will be 95. So 95 that we have calculated here, so that gives you 190. And this one we're going to multiply 2,000 times 50 absorption costing, that will give you 100,000. And after that you have to calculate the cost of sales, and all of us we know how to calculate the cost of sales. Cost of sales is opening inventory plus production less the closing inventory, and the cost of sales will be 1039000, and the cost of sales for the marginal costing will be 544000. And the fixed cost for absorption costing, it is 0 because you included the fixed cost inside of the product. And this is the reason the opening inventory and the closing inventory give us higher amount. So remember, fixed cost we divide with the number of unit and we include inside of the product. So for the absorption costing method we don't have a separate fixed cost. But on the other hand, on the marginal costing, we never include the fixed cost inside of the product. So we have to minus now fixed cost as a period cost. So 450,000 we minus, and that will give us the profit or loss. So if we minus the cost of sales from the sales, that will give us minus 49,000, and that give us minus 4,000. So sales minus cost of sales, that will give you the profit. So that's how we can calculate the profit statement for absorption costing and for marginal costing. The next question we're going to see, that is for task 4. And task 4 is very easy question. All we need to do, we have to calculate the 3-month moving average. That's very easy. All we need to do, we have to add the 3 and divide by 3. So if we do that, 5760 plus 5820 plus 5760 divide by 3, that will give you 5780. And after that you do the same way, added this 3, divide by 3. So 5760 plus 6600 plus 6120 divide 3, that will give you 6160. And if you do this 3 divide by 3, that will give you 6200. So this is the moving average. 3 months is very easy and straightforward. That should be easy for everyone. The next question we have here, that is complete the following sentence using the drop down box to indicate your answer. Seasonal variation equal actual sale for a month less the sale for the month. What is that? So less sales for the same month. So this is basically the trend. So because of the trend, the sales figure goes up and down. So for example, if a business have a trend like summertime, their sales gone up, and the winter time the sales goes down, so this is the trend for that business. For example, for a private tuition, maybe during the school holiday time the sales is less, but peak time when the school is open the sales is more. So this is the example of the trend. The next one we have, it says the observation that retail sales are higher during November and December is an example of seasonal variation. So basically, if in a particular month, if the sales goes high and after that the sales goes down, it is called seasonal variation. For example, if the company sell fan or AC, maybe during the month of June and July when the weather is really hot, maybe that time the sales is really high, and maybe the winter time the sales is really low. So this is the example of seasonal variation. Let's have a look at the next question what we have here. That is the index. So let's have a look how can we complete this index question. In this question we're going to see how to calculate the retail price index. So to calculate the retail price index, all you need to do, you have to find the base RPI. So remember, the first month is always the base. So they're asking cost at January price. So all the cost we have March and June, we have to bring back to the cost of January. It's like kind of the NPV, if you have ever done NPV, net present value. So more or less like this, you bring back the cost, future cost to the present cost. So if the cost in June is 135,000, how much will be the value right now in January? So let's have a look. The RPI for January, it will be same in January. So if I bring back the cost for January, 129,000, that will be 129,000 anyway, because whatever is the cost for this month, it will be same for this month. So the way we calculate that, we said RPI is the base period, so that is 170 RPI in the top. And obviously it's for the January, so on the bottom it will be 170 as well, and times by 129, and that will give you the same price, 129,000. The next one we have for the March, so we do 170 divide 172 times 132,000. That will bring us the cost for March. So we said 130, 465. The next one we have same thing, 170 divide 174. So 170 divide 174 times 135,000, and that will give you 131,897. 131,897. So that's how we can do the RPI index. It's not very difficult thing. All you have to remember, the base RPI, that will be always in the top, and the next one, whatever month you want to bring back, that will be always in the bottom, and you multiply with the actual cost. That will bring you down to the month you are looking for. The next question we have here, the retail shop's delivery cost vary in a linear manner and can be expressed using the regression equation a plus bx, where x is the number of units, so we have to multiply with the x to identify how much is the cost. That's not a problem, it's a very easy question. Normally this type of question come in the exams, you will have very few marks, like 2 or 4 marks. So let's have a look what is the requirement here. Is to calculate the value of a and b. So a is the fixed cost, and b is the variable cost per unit. So if you read your linear regression chapter, you will understand more from there. So regression equation will help you to understand more if you read the chapter. From here, all you need to do, you need to identify the fixed cost and the variable cost per unit. So we have 200 unit and 2000 unit. For 200 unit, the cost is 5,000. For 2000 unit, the cost is 14,000. So we say 2000, the cost is 14,000. So for the 200, the cost is 5,000. So we will do high-low method. So the difference is 1800, and here it is 11 or 9,000. 14,000 minus 5, that will give you 9,000. So 9,000 divide 1800, that will give us per unit cost, that is £5. So I said variable cost per unit, that is B, £5. And how much is the fixed cost? Now we have to identify the fixed cost. We can pick any one, either 2000 or 200. Let's pick up 2000. So 2000, the total cost is 14,000. So we said 2000 times 5. So 2000 times 5, that is 10,000. This is the variable cost. So from the total cost 14,000, if I minus the variable cost, the difference is 4,000. This is the fixed cost. So we said the value of the A is 4,000. This is the fixed cost. So that's how we can complete this question. So this is our sample assessment 1 for the management accounting, decision making and control. So this is the part 1. Maybe in part 2 I will start from task 5 and will complete the whole question. So hopefully you understand the way I explain everything. If you still have any confusion, you can always email me. I have the email address on the description below, so you can find my email address. You can email me if you have any more question. Thank you very much for watching, and please let me know if you have any question from the explanation I make.